What is up, guys? Welcome back to the TNT Business Podcast. I'm your host, KT Temple, and I am here with my co-host, Kent Temple.
I feel like there's three of us now instead of two because this guy's getting on here pretty regular.
I mean, we can change the name again. It wouldn't be the first time if Joseph wants to be on now consistently. But I already have enough trouble scheduling with you every week. I don't know if I can throw a third thing in here, but yes, we got Joseph Klosik back again today, man. Thank you for joining us.
Absolutely. Thank you guys.
Well, the funny thing is so there was a pretty big announcement at the end of last week. Well, we thought it was a big announcement. And, anything that has to do with MLS, and by the way, if you're in real estate, we will get to MLS second today. We bring Joseph in. He's so involved in it and has such great knowledge about it. And so then we woke up this morning and there was a bombshell of an announcement in the real estate industry. And it was like, well, we would ask Joseph to be on here for that one too. So we might as well, So we're going to attack both of those. But before we do, I would like KT to thank our sponsors.
And our sponsor is the Temple Team. Whether you're looking to buy, sell, or invest in real estate, you can find us at thetempleteam.com. We are a local Charlotte, Lake Norman area real estate team. We've got agents all the way from Hickory down to Fort Mill. So if you're looking to buy, sell, or invest in real estate, reach out to us. And even if you're not in the area, you're looking somewhere nationally or internationally, still reach out to us. We have a great network of top real estates all across the country, and we would love to connect you with them. So again, if you're looking to buy, sell, or invest in real estate, find us at thetempleteam.com.
And we also have an affiliate office in the Charleston, Mount Pleasant, Somerville area of South Carolina.
Yeah, if Joseph joins consistently, it's going to mess up my whole ad read, and I barely have that down now. So when I started in real estate, so 10, 15 years ago, it felt like there were three big companies. It felt like it was like Century 21, RE/MAX, and Keller Williams. And it feels like we're back to three big companies again. They've all merged. All the big ones have now merged together, and it feels like now there's three giant ones, just like there kind of was.
Yeah, KT. So in my previous life that we've talked about, I was on the wholesale side, but I sold to major department stores. And if you go back during your lifetime, KT, there was Belks and Profits and Parisians just in the Carolinas. Now they're all Belks. And then there was Burdines and Riches, and now they're all Macy's. And you can go across the country wherever you live, and you can watch how it all kind of consolidated in. And basically what you've come to in that world, and we'll call it the world of apparel, you've got the four choices. And at the bottom level, there's Walmart, and then there's Target, and then there's all these associated department stores that really struggle to compete. And then on the upper end, you've got the Nordstroms. Okay, so we've got those four levels. It really feels like we're heading to that in real estate, where it's going to be. There's just not going to be. So when I started in apparel, there was a mom and pop shop in every town, and basically the Walmartization took that away. You're going to see the same thing in real estate. There's just the single person or the small local office with the technology that you have to have. They're going to struggle to compete, and so it is. And right now, what we're witnessing is the consolidation.
Yeah. And so let's read the headline in case you haven't heard. This is being recorded on Monday. This happened Monday morning.
By Wednesday morning, they've heard.
Yeah. RE/MAX acquired by Real Brokerage for $880 million.
Wow.
Yeah. And so this is just yet another massive consolidation move. Real Brokerage announced it was acquiring RE/MAX for $880 million. And honestly, a surprise. I was asking you guys before this if anyone had any inclination of this, and it doesn't seem like anybody did. It seems to be a kind of surprise to everybody in the industry.
So not only had I hadn't heard anything, but I'm not connected to that level. But in talking to the people that I know that are, this one kind of came out of Joseph is in kind of came out of left field. And the thing is, Katie, in case people are not familiar, I think probably everybody is familiar with RE/MAX since the early 70s.
Yeah,
I mean they are, and I don't think you've ever heard me ever say anything bad about RE/MAX. I mean, they've been a great company. their model, you know, they kept their model, and that's what caused them to start shrinking. They're not as big as they used to be. But, you know, RE/MAX always touted itself as the most productive agents. And it's really a title that they earn. You know, they're kind of per agent. They typically do a lot of business. They don't take newbies like a lot of people do, and then they want productive agents, and that's what they look for. So when you look at this, if you look at the outside, you've got a Real that's got 30-some thousand agents versus a RE/MAX that's got 180,000 agents. And you look at the production, you're going, the little guy bought the big guy. The thing is, in the world we live in today, Real actually has a higher value than RE/MAX does.
They got two magic letters in all of their press releases that I think makes that happen.
What?
A and I.
Oh, okay.
Yeah, I mean, it really is. Look at the stupid shoe brand that failed and bombed, and they relaunched last week as a shoe brand, relaunched as an AI company last week, and their stock shot through the roof. So it is those magic two letters that make your company more valuable in the market right now. And I think they use that leverage to make this acquisition.
So Jojo, we'll let you go. Tell us, give us your thoughts on it.
Well, I mean, it's an interesting move because the value of one and the value of the other right now, in my opinion, are two completely different things, right? I mean, the value of a RE/MAX is exactly what you were saying. It's a high quality brand, right? I mean, it's, you know, you don't really have a lot of bad RE/MAXs, so to speak. It's just been around for a while, and their agents are normally productive agents. Their economic model just supports that. Obviously, there's exceptions to everything. And then the value of Real is the tech side of it. They're just the new kind of. I don't know where this is an area for me. It's obviously I'm being kind of quiet. I'm like, where? I mean, those numbers that you just said, 35,000 of Real and 150,000 of RE/MAX. If that's not the biggest indicator of all of this, of where this market's going in consolidation. Well, I don't know. The
big thing for me is what I'm looking at. So you've got Real that is basically a tech platform that doesn't believe in offices, and they're a rev sharing company with, you know, a low cap and low fees. And then you're going to RE/MAX, which is an office base. They have more offices than anybody in the world. There's more RE/MAX offices than anybody, and so you're buying this office based, very traditional split kind of model. There is nothing that these two things have in common except they both sell real estate. But they don't.
Well, I think that.
And I mean, it's, you know, a bunch of the comments, if you're looking at any of the social media, it's talking about, hey, now wait a minute, did Real just buy the company that they've been making fun of for the last 3 years about how old they are and how, you know, and then did RE/MAX just sell themselves to the people that go, well, you have to have an office? I mean, this is some intermingling that you just didn't see coming because they don't do anything the same. The integration on this, I just don't know what's going to happen.
That's going to be interesting to watch. But I do think they're very similar. I think they're very similar in their time, right? I mean, I think Real's got a little bit more of the, not rogue in a negative way, right? But independent agents, not going to the office, that sort of thing. I've always felt that way about RE/MAX. Right. I mean, RE/MAX has always been they're very independent agents. They're more of the rogue agents, again, not in a bad way. I know a lot more RE/MAX agents that would work from home. They don't worry about the office. I mean, they have more offices. You're right. That's just because their offices are always smaller. I mean, I remember when I first started in Atlanta, they were everywhere. I mean, every block they had one, it seemed like. But I do think it's just that's kind of what Real is now. They're just, you know, they're smaller offices because they're newer. Right. And they have the independent agents that are kind of wanting that more tech than I don't know. It will be interesting to see the rollout because they're very different models.
Well, if you don't keep the two separate, you know, if there's not, okay, you're in the RE/MAX brand and you're in the Real brand. If you don't keep them separate, I just don't know what your model looks like because, like I say, nothing that they do matches in terms of what they offer their agents and in what they charge their agents, how they make the marriage between them and their agents work. And you've got just two completely different models. So it's going to be interesting to see.
Yeah, and I think we've got to be careful on because there's a strong case that you don't have a whole lot of blending of the models. There's a strong case that you have two very different companies that are powered by the parent company, or I should say different models that are powered by the company. Because I just don't know how you change, and so it could be the opportunity for two types of agents to work for the same company. Similar that you have, you've always had that. You've had different levels within one company. Maybe they just kind of bought into that at a high level instead of creating a new one, just merged
So
two.
Joseph, so if basically they just spent $850 million to buy to now own two companies that are worth $750 million. So the economics look bad. You're going, but if we combine, typically there's all these savings that you can do by integrating them together. So if you don't do that, then where's the value? And by the way, the stock market, in case you haven't looked, the stock market has spoken. Last I looked, real was down about 25% today. And the last I saw, Remax was up about 23%. It was up more than that, and it has come back down some. So the stock market's going, the person that's not going to exist anymore, which is Remax as the way it was owned, thinks we got a hell of a deal out of this. And the stock market's like not real happy about it.
Which is weird because they just acquired 120,000 agents or something like that. I mean, if you're looking at this as a recruiter in Keller Williams, you go, oh, they just bought, lucky them that they just went from 30,000 agents to 150,000 agents overnight. And so it's interesting that the stock market does not value that the same way we did. I mean, if we could write a check and get a whole bunch of agents, a lot of us would love to. A lot of us are looking for those options. They just did it with a whole company, one of the biggest companies. So it's so surprising that the stock market has the total opposite opinion that we do.
I mean, like I say, the stock market definitely has spoken on this. But KT, part of the way I look at it is if I looked at you guys and said, well, hey, would you like to have Drake May from the New England Patriots on your team? Would that sound cool? Would you, Joseph? Drake May, finished second. And by the way, I bring him up because he's from here. But he finished second MVP last year. Would you like to have him on your team? Yes or no?
Yes.
You would? Oh, I forgot to tell you. I'm an NBA basketball team. And that's what you got here. Yeah, you got all these great Remax people, but you're putting them onto a team that they don't fit on unless they keep them completely separate. And if you keep them completely separate, I don't understand. Then I don't understand where the value is in even combining the two companies.
Not even like a business model difference. I think they're also going to struggle with like a cultural difference.
Oh, 100%.
Very different.
I mean, it's because it's a bunch of young tech people that now are the owners of a historic brand and company who I'm trying to find a nice word to say older. Don't laugh.
Well,
I mean, there's not a bad thing. Like if you were to look at the most prominent Remax in the Charleston area is owned by a couple that are staples in the real estate industry, and I have the utmost respect for them. And they are completely different. I mean, it is if you were to pick like Old South, look, I mean, great business people and everything. It's like I see what you're saying on there. It's not a bad thing. I mean, their business is thriving. They've grown more in the last couple of years probably than they ever have. So they're a growing business locally. I am very curious to see how those cultures match because
what they're going to say.
I don't know, and I don't know them very well. Something tells me they weren't sitting back saying, man, we need the latest technology when I've watched them take over certain areas on the commercial side and everything. I don't think they're thinking about that. So what are they going to do? They're going to go buy into the platform?
No, they're not. Yeah, they're not. So where's the value for them? And then,
right.
Well,
do they stay?
And we are, again, Keller Williams. We know what it looks like when you force a software onto a bunch of people all at once. It did not go swimmingly, and we're still figuring it out 7 years later. It is a rough push when you say this is the software you use now. You do not have a choice.
Right.
Well, and now don't take this as a slam. It's not. This is just who the companies are at this time. If I had to do a deal with a Remax agent or a real agent, without knowing who they were, just which one, I would pick the Remax agent because I guarantee you, if you could pull it, the Remax agents have much more experience overall. I would know I was getting a much more experienced agent guaranteed at Remax versus And I just think that would be a great. I wish we knew that. What is the average age and the average years of experience of a Remax agent versus a real agent? I bet it looks, very different. And yet now, but you got the young people. The young people are in charge because that's who bought.
That's who bought who. Yeah.
Yeah.
Well, and I just think that's what's going to be so interesting to play out because, when we had this discussion a couple of weeks ago, we talked about the difference between. We were, I think one of the comments was we're talking about when your fiduciary switches from being a consumer to the stockholder. But this case, you're combining, like you've got, let's be honest, you make big decisions like this because you've got stockholders that you're actually making happy. And yes, they both had stockholders. But you've got a fundamental shift and difference in mentality. I don't think you've got a bunch of Remax people thinking, what's this going to do for our stock? I think the leadership, I think the corporate, yes, but I think their 150,000 associates, they weren't thinking that. They weren't thinking.
Well, they had, and from everything that I've heard, this was a very well kept secret. That
it was because
the people at Remax didn't know yet. They didn't know they were going to wake up this morning and have a new boss. Is basically what it
right.
We're going to tell to. So, guys, here's the big for our listeners. Here's the big takeaway that I want you to get from this. What we're talking about right now is the biggest news in real estate that you will ever hear until the next one comes along.
Until next week.
And it's
right.
And it's going to happen. Yeah, well, it's going to happen. This is just there's a wave of this, and somebody else is going to buy somebody else. It just is. We're not done. You're going to continue to see this consolidation, and ultimately down the road, the real estate landscape is going to look different. I do think there'll be. KT, you were talking about you thought of a handful of companies. That's not the way it was, bud. When I got into business, there were all kinds of real estate.
Yeah, that was just when I started. We were on the trek to number one. It was like, all right, we're versus these two, and
right.
then Compass, all these other ones joined, and now it's gone. It's like reconsolidated to where it was.
Well, I mean, 10 years down the road, I really do think that you're probably going to have the Walmart of real estate and the Target of real estate and the Nordstrom's of real estate. And then you'll have everybody else lumped into that department store feeling. And it just depends on who you're going to align with and what what value you require in there.
I think this is a good jumping off point to this was supposed to be about today.
Oh yeah. So let's spend 2 minutes on that.
Yeah. So and I'm going to read two headlines. Compass partners with Chicago MLS for nationwide private network. And Compass Real Estate expands Colorado dominance as new report warns of consumer risks.
All right, JoJo, you're up.
Came out.
I mean, this is
same day.
It's great marketing because what those two headlines say is Compass joined the Chicago MLS. That's what the first one is. Chicago MLS got one new user. They just happen to be a big one located in a couple different areas. Like that's what happened here. And then the second one, they bought a company in Colorado. I mean, that's news. Don't get me wrong, that's news. What was fascinating, and Kent and I were talking about this earlier, is the verb. Look at what I'm not as much of a grammar nerd as Lynn is, but it's like, what is it? Is it the perspective of all of the articles, right? It's like it's not first person, but it is all about why this is good for Compass, right? Even the agent they interviewed said, "Man, I'm just glad to be with Compass because they're leading everything." And I'm like, they're leading this charge. I don't know they're doing. And then there's a little blurb at the end about consumer. And listen, I'm never one that likes to talk poorly of other companies. They're just making it harder right now. They're making it harder for us not to talk about it and say, what is the real motive here? Buying more companies is to build your bottom line and your brand. And that's fine. That's fine. Joining the Chicago MLS, I think I think that will help the consumers, but let's be honest, that was a play. It was a play to join an MLS. I think it was a good one because honestly, I agree with why they did it because that MLS is probably one of the more liberal ones when it comes to the rules. They've got an unlimited amount of time to have your listing in the MLS, to not have public showings, to have public showings, to syndicate, to not syndicate. Like they're wide open. You put it in the MLS and do pretty much whatever you want, right? Which I agree with Refkin on this. Like the consumer needs to be able to do whatever they want. I think the biggest thing, the most heads to be turned on this news is for MLSs. MLSs need to wake up and say, we need to make sure that we're providing the most progressive services that we can for our members. Otherwise, they're going to do this. Because right now, what happened is if I'm an MLS and I don't know anything about this, I'll just say South Florida. I don't know anything about the MLSs down there, and I'm not playing nice. There's no landlock that keeps my broker from then going and my participants as an MLS to go just join another one that's going to do better, right? And that's what's happened here. They picked a large one that has a lot of options, and they joined them. And what that probably means on the local level is that they're going to give support for all of their offices to everybody. Now, all of a sudden, the Chicago MLS is going to have participants from all around the country, which, by the way, any of our MLSs could. Charlotte will probably start doing it because they've been real progressive about it. Charleston, I know, is going to probably make a play as well. It's just, again, give optionality.
So I want to point out just how surprised I am that Chicago has a liberal MLS. That's shocking. But the real reason I wanted to have Joseph on here is I kind of had that thing when I saw it. I thought that was the biggest headline and like, holy cow, this is major news. So I immediately called Joseph, and he just laughed. He goes, Canopy, which is in Charlotte, they need to be looking at doing this. Charleston needs to be looking at doing this. We need to have this conversation.
Yeah.
Ultimately,
now I'm sure that the details behind it make this a little bit. I don't think it's so simplistic that now they've just said. I mean, I'm sure there's details about it. I'm sure there's some corporate deal, or because you've got hundreds of offices that would have to join, if not thousands. I don't know how many offices they have that would have to join. And I'm sure they're doing it under some sort of special deal to do that. But at the end of the day, all they did was get a boatload of more users into the Chicago MLS.
Well, I want to be real clear, and I've said this. I'm going to continue to say this over and over and over again. If I wanted to buy a house in Charleston, I had to look in one place to go buy a house in Charleston. I think there are people in our industry that are trying to make it so that if I want to buy a house in Charleston and want to see everything available, I'm going to have to look in 4 places. And I don't think that is a win for the consumer. So anything that keeps us in all the information being in one place for the consumer is what I am for.
This was probably the biggest move towards that this whole thing has been, right? I mean, that's
toward what?
Towards moving for more people to one place for all consumers. Yeah, because I mean, then that's the overwhelming irony of this, and this is why I love our industry. But let's be honest, there's some smart people in other industries that are looking at us like a bunch of children, just like on the playground. Because this started 6 weeks ago. We were maybe 8. We were talking about how crazy it is that this one large company wanted to only have certain people look at their listings. And now all of a sudden everybody's fighting to have the most amount of people looking at their private listings. And it's like, what are we doing here? And so this is, I mean, I think because I've always said this, we've got some neighboring MLSs of which I'm not a huge fan. And for me, it's like, I don't know that there's a strong argument of why the consumer shouldn't just list into Charleston's and not worry about some of the neighboring ones, because once it's in one, all the places people are going to go see it, the consumer, are going to see it.
Yeah. Everyone's got a data feed that goes to everyone.
Yeah. So if you've got one, go back to this, like succinctly addressing this. If you go to Chicago, who's got already, by the way, Chicago, it's my understanding from what little I knew about that MLS, they had to make little adjustments when all this was announced because they already were like, sure, we'll help with clear cooperation. You can put it in the MLS in one business day, and then you can do whatever you want with it at that point. You can show it to nobody. You can show it to everybody. You can show it to, and that's fine. I think you should be allowed to do that.
All right.
So at the end of the day,
we thought that was
Compass joined the Chicago MLS.
No big deal.
But here's the deal. It's news, and everybody's wondering. I mean, we'll have, as brokerage owners, we'll have our own agents be like, well, what does that mean? They're going to be part of Chicago. It's like, it's not going to mean Chicago's MLS. After that all being said, Chicago's MLS is not getting any more exposure to the consumer than ours is because there's the data feeds. Now, will there be more agents that see it? Sure. But is somebody jumping on a plane to head from Chicago to Charleston to show property? No, that's not what's happening.
Well, hey, the best news is that things like the 2 things we talked about today is what's going to keep us in the podcast business.
Yeah, and people like this guy, Tyler Bossetti, real estate influencer, gets 6 years in prison for a $20 million Ponzi scam.
Yeah, this was going to be our second story today that now came in third.
This one.
And I'm just going to read the quick headlines because it is fun. A real estate-focused social media influencer or finfluencer who promised his followers huge profits and financial freedom has learned his fate after pleading guilty to tax and wire fraud. Prosecutors say Bossetti secured over $23 million in funding from victim investors across the United States internationally. He has now been ordered to pay $12.5 million. And it was just a giant Ponzi scheme. He stated that he solicited short-term real estate investments, promising extraordinary high returns, frequently 30% or more, which were to arise from purchasing, rehabbing, refinancing, and ultimately renting or selling residential properties. So he was crowdfunding real estate deals and promising returns.
And when you read it, it was, I think some things start out as people had good intentions, and then they kind of got behind, and they bought, and then dude, this guy was taking people's money and buying houses and cars and vacations.
I have had because again, I'm in my early 30s now, and I have friends still who cannot afford to buy homes. It's not in the cards, but they've got a little bit of money that they would like to invest somewhere. And many times I've been asked, is there like somewhere I can put this money to buy real estate and build equity without having to buy a home? And it's exactly what this guy was doing. And I have been.
Was promising.
Yeah. It
just wasn't legitimate.
Crowdfunding real estate flipping is what they were looking to do. But then on paper, you can be an equity holder and then hopefully use that to actually buy your own home. I get the idea of it, but these are the kind of people that normally end up hosting these kind of, let's call them scams, because they almost all have been scams. Anyone that I've ever researched for anybody doing this has always been a scam. I have never found a legit one, and that's just, it might exist out there. I just haven't heard of one yet.
Yeah, well, this guy's going to serve. So he's going to serve 7 years, and I think it's federal, which means there won't be any parole. And then, the thing is, he'll never pay back that money because he's never going to have a job he can make $12 million to pay people back because now he's got this history.
He won't have a real estate license.
I don't know. Well, his attorney did say he's accepted responsibility and he's fully remorseful for it. Deeply remorseful.
Yeah.
Oh, well, yeah. They always say that right after they're found guilty. Right. He didn't say that before that.
You can't admit guilt, bro.
Yeah.
All right, guys. Any final thoughts on these news stories? This is great. I love. Anytime we have Joseph on, that means we had enough to actually figure out what we wanted to talk about. So we just had.
It's now the TNT and JoJo podcast. So,
TNT and JoJo. Yeah, no, I don't listen. I like what you said. This is just until the next news drops, and I think it's important. I appreciate what you guys do. Like part of me is kind of like, do we need to be talking about some of these so soon? I think yes, but we also have to be careful. Like going back to the original story, the real and Remax. Like we don't know enough yet to understand. So ask these questions is good. But man, there's a lot of opinions already out there. It's like okay,
and a lot of opinions from people at Remax too. So,
right. Yeah.
If you own your own brokerage and are looking to expand, it might be a good time to reach out to a Remax agent near you because they have opinions on this as well.
I mean, hey, listen, you've got people that have worked for Remax 10, 20, 30 plus years that woke up today and found out that the home they had always had is not looking the same.
Yeah.
Yeah.
And it would be a lot smaller headline if Remax bought Real and said, here, we're going to buy Real, and because we want their tech platform and their agents can come join what we're doing or not, we don't care. That would have, that one, a couple of years ago, that would have made sense. In today's world, that's just not how it works. Real is actually, if I read it right, Real is actually worth more than Remax, despite the fact that they don't sell anywhere near as much real estate. And of course, Remax, part of Remax does have a lot of debt that's part of this deal.
So,
and that was hard.
Joseph, it's no longer the JoJo KT Temple Team podcast. It's going to be the TNT AI podcast. We're working on.
Oh, yes. I don't blame you.
All right. So TNT AI podcast is what we're known now as.
Yeah.
Awesome. Joseph, if people want to get a hold of you, come check out Charleston and go buy real estate in Charleston, how would they How would they follow up?
Just go to thetempleteam.com and we'll
Just
put
get
it the right way.
Yeah, put it in the right direction. You can email me, joseph@kw.com. You can't get any easier than that.
Awesome.
So.
But thank you to the Temple Team. You can find us at thetempleteam.com, whether you're looking to buy, sell, invest in real estate. Guys, we'll see you again next week with another episode. If you found this episode interesting, learned something, feel free to leave us a review. It really does help us out a lot. And yeah, we'll see you guys next week. Thanks for listening.